Ladies and gentlemen, welcome to the Blue Collar Trading Channel. I am Chris, your host. I am not a financial advisor. I am by no means a professional trader. So, what I'm going to go over in this is not advice. Please don't take it as advice. But what I will show you will help you to begin to learn how to become a trader, how to become an investor. I'm a blue collar worker. That's why I started the Blue Collar Trading Channel so that I could put my money to work for me as many of the professionals have told me all my life. A lot of those professionals will say, put your money to work for you, but they forget. They've been in it for so long. They've been in it for 5, 10, 15, 30 years. And they forget that a lot of us don't know the lingo, don't know all the terms, don't know what all of it means. So in this video, I plan to go over the very basic part of it. If you have any questions, put them in the comments section, please. And I'll try to get them answered as much as I can. So let's get started. Okay, all the following is straight from the help section of my Robinhood account. If you have a Robinhood account and you go up to the account, click on that, and then you'll have an option to go to the help center. From the help center, you'll go to investing, and then you'll go to investing with stocks, the basics. Okay, why you should invest. Let's go over that. Why should I invest? People invest for the opportunity to generate greater returns on their money. Investing is an alternate way to save for a down payment on a house, a dream vacation, or retirement. I'll take that a step further. It's also an alternate way to make extra money. Investing lets you get involved in companies and industries you are passionate about. How much should I invest in stocks? There is no hard and fast rule of how much you should invest in the stock market. A good goal is to invest 5 to 10% of your monthly income. However, this shouldn't get in the way of any monthly expenses you have. Guys, gals, don't take the money you have set aside to pay your electric bill and start using that to invest in stocks. Use money that you have aside that's not assigned to anything. Your investing strategy should take into account your current financial situation, your financial goals, your timeline, and your risk tolerance. If you can't afford to invest immediately, I would suggest opening an account where you can at least paper trade. Learn. Spend the time learning. The younger you are and the longer you expect to be investing, the more you can focus your portfolio on long term gains, and the less you have to worry about short term risk. A common way to calculate how much you should invest in stocks is by using the 100 rule. If you subtract your age from 100, it equals the percentage of your portfolio that should be allocated to stocks versus cash or fixed income securities like bonds. Two things you always need to keep in mind. These two things are very important. Past performance of the stock market doesn't guarantee it will continue to perform this way in the future. We just came off of a 9-10 year bull run. Basically, what that means is the bulls push the stock market higher, bears push the stock market lower. And we had a good, solid, strong 9-10 year long bull run. COVID kind of put the hiccup, made a hiccup in that. And 2020 has been an interesting year. You should only invest what you're willing to lose. Folks, if you can't afford to lose it, don't invest it. You need to be real about this. You're going to lose. You're going to have red days. Red days are the days you lost. Green days are the days you're up. You're going to have red days. So only invest what you're willing to lose. Again, 2020 is a good example. Past performance of the stock market doesn't guarantee it will continue to perform this way in the future. Folks, you should only invest what you're willing to lose. How to find an investment. How do I find an investment? Okay, here's some ideas. Many people choose to invest in companies and industries they're passionate about and believe will be successful in the long term. Some people choose to invest in the company they are employed with. A company they represent, or even a company they do business with on a regular basis. The reason to begin investing is that when you invest in a company, you own a piece of that company. The value of your investment will depend on how that company is doing. If the company is doing well, your piece of that company becomes worth more. So, what's the strategy? Step one, find a company. Think about different products and brands you can't live without. What products did you use today? Did you have a soda? Did you have a Coke, Pepsi? Both those companies are publicly traded on the stock exchange. What stores did you visit? What stores do you visit regularly? Walmart? Just about everybody's been at a Walmart. Walmart is publicly traded. Talk to friends and family. What industries do they work in? What do they invest in and why? Think about causes that are important to you. Are there companies or industries that support these causes? Stay up to date on the news. The news always has what's going on. What companies and industries are doing well? Step number two, do your research. If there's a specific company you want to invest in, you may want to learn more about their annual profits and losses, consumer demand for the product or service, their executive team. You can do some of this research through a brokerage like Robinhood by scrolling down on a company's page. If what you learn gives you confidence in a company's long-term performance, you may consider investing in it. If there's a specific industry that you feel has significant growth potential or room for innovation, you may consider investing in a fund. Funds, or ETFs, are a great way to invest in an industry or group of companies at once. Exchange traded funds, ETFs. What are funds, ETFs? Funds are a quick way to invest in a group of companies all at once. Funds you can invest in on the stock market are called exchange traded funds, or ETFs. There are many different types of ETFs that focus on different sectors like clean energy, technology, or even social impact. When you invest in an ETF, the value of your investment will depend on how the collective group of companies is doing. That's diversification. So, what's the strategy? Most investment experts will tell you it's important to have a diverse portfolio of investments to help reduce risk. Diversification means investing in a variety of companies and sectors so that your portfolio's performance is not tied to one company. This way, if one company or sector is struggling, it doesn't hurt your entire portfolio. ETFs are a great way to get instant diversification. For example, the Vanguard S&P 500 ETF, or VOO, is a popular held ETF which allows you to invest in the 500 largest US companies. Look, investing, the toughest part of starting anything new is to stop pondering or thinking about it and just start it. Keep it simple and get going, or you will literally end up talking yourself out of it before you start. First thing to do is open a brokerage account. Use the links below to open an account at Robinhood or Webull. Both of these have commission-free trades. Fund your account with $100 or more and receive at least one free stock from each one of these brokerages, and boom, there, you've started investing. Experience is the best teacher. Folks, anytime you start a new job, at first you're no good at it. But as you gain experience, you get better because experience is the best teacher. Don't be afraid to make mistakes. Anytime you start a new job, you're going to make mistakes. You learn from them. Don't be afraid to make the mistakes when you start because you're starting small. Therefore, the mistakes will be smaller. You want your mistakes to be small. Jump in, make your mistakes, study the mistakes of others, and ultimately learn from all of those mistakes. Observe the circumstances that affect your investments and gain the experience that will teach you to be a better investor. Look, if you're getting value from this, make sure and hit the like button. Helps the algorithm to spread the channel. Hit the subscribe button and you'll be alerted to other videos that are coming up in the future. Don't forget, jump in, make your mistakes, study those mistakes, learn from those mistakes. Be sure and observe the circumstances that affect your investments and gain the experience that will teach you to be a better investor. guys, gals. Until next time, may your green days outnumber your red days. This is the goal of every investor slash trader. More green days, less red days. Thanks for joining me, guys. This is the Blue Collar Trading channel. Be sure and hit that like button. Be sure and subscribe. Thanks again. Till next time. Take care.